channel. Let's discuss ECZ, where we do commerce and accounts. But today we'll be doing accounts, and this was through a request that was made by Masebo in the comment section, suggesting that we do non-profit making organization and also incomplete records. But we'll first start with non-profit making organization, then I think by the end of the week we'll post the other one for the incomplete records. So there are certain things that we need to know pertaining non-profit making organization. So if you're new to this channel, please like, share, and subscribe to support the channel so that we grow and many people get to know about this channel, and so that YouTube know that what we're posting is important content that many may be breached or maybe may be informed about the content that is being shared on this YouTube channel. So if you're having any personal challenges with comments and accounts, I'll drop my WhatsApp line. You can simply just inbox me. If there's a question that you've tried, it has failed to balance, then you want help on how to balance it, or you want help on how to handle certain accounts as you're preparing for your 2023 exams, which is coming in November, feel free. It's just for free. Inbox me on WhatsApp. I'll drop my line there. So non-profit making organization is what we'll be doing here. So what is non-profit making organization? What comes into your mind when you say non-profit making organizations? So non-profit making organizations, these are simply organizations that are in existence, not for profit. The main idea or the main ideology is not to enter business to make profit, but they are there for a social cause. So the social cause might be health, might be healthcare, that is, it might be healthcare, it might be environmental issues, and it might be sports, anything, but not really going there to make money. Money comes as they do whatever they do, but their main objective is not to exist to make money. These are non-profit making organization. We take, for example, I believe all of you take civic education. In civic education, we look at civil societies. These are non-governmental organizations. So as these non-profit making, they're NGOs. They are there in existence for a social cause. So there are certain terms that will be exposed to in this non-profit making organization, such as subscription, surplus, accumulated fund, statement of affairs, all that will handle it. So as we go on trying this question, as we will be trying to solve it, and all that, concepts, principles concerning this will be displayed, and we'll get to understand where they apply. So please pay attention. I hope you have a sample of this paper, so that you are following as well as we are going through the same paper. So we'll be doing 2022 GCE, that is for the non-profit making organization part. So as we go on into the question and solving it, we'll be extracting principles and extracting concepts so that we are informed on how these concepts and principles apply specifically on that area. So the question is goes as this. It says the following information relates to Lesco's tennis club for the year 2020. There is this: clubhouse 1st January 2020, equipment 1st January 2020, bank 1st January 2020, stock refreshments 2020, then summary of receipts and summary of payments. So summary of receipts, when you just see the summary of receipts, this is really the bank account. Then on our bank account, we're looking at the debit side, things that we received. That's the receipt part. Then when you look at summary of payments, this is the bank account as well, but on the credit side where we make payments. So don't get confused on some receipts and payments. So receipts, we receive. Payments, we give out. Debit and credit. Then we go on to the adjustments or the additional information. They're telling us at the end of the season, 31st December 2020, the following information was available to the tennis treasurer. So the first one, equipment, sports equipment including additions, was valued at 9,000. Then stock of refreshments was valued at 1,650. Then subscription owing, a gas bill was still to be paid, insurance prepayment, clubhouse rebuilding for the extension, then members' interest on loan had not been paid. So this is our question. We'll start this question. We'll do everything here. So the first part of the question is telling us calculate the accumulated fund at 1st January 2020. So accumulated fund, we calculate accumulated fund in the statement of affairs account. For us to find our accumulated fund, we use the statement of affairs. Just like when we want to calculate our net profit, we use the trading profit and loss account. So is the issue here. When we want to find the accumulated fund, we're going to use an account known as the statement of affairs. So this is what we have here, the statement of affairs. We're going to use this to prepare to calculate our accumulated fund. So accumulated fund is simply more like capital. You know the formula for capital. Capital is simply assets minus liabilities. So for us to find our capital, in our case, we're calculating our accumulated fund, which is the same as capital. We're going to bring out our assets, then we're also going to bring out our liabilities. Then the difference between our assets and our liabilities will be our accumulated fund. This is what we're going to do. So we're going to look, and I've even directed us, they've told us on 1st January 2020. So we'll go on first, anything, any asset and liability on 1st January, we're going to enter here. So here, they're telling us clubhouse. Clubhouse is an asset. Then equipment is an asset. And you see in the dates, this is 1st January, like they've directed us in the question. Then bank 1st January, stock 1st January. All these are assets. So in our question we don't have liabilities, but in a case where you have liabilities on 1st January as directed in the question, you need to bring your assets first. You list your assets, then you find the total. Then after finding your total for assets, you bring your liabilities down, you find the total, then you list the totals of assets and the liabilities, then you found your accumulated fund. But in our case, we don't have the liabilities, so we're just going to enter these assets. That will be our accumulated fund. So our assets, we have clubhouse, so we start entering now. Start entering our assets. So going to say assets. Let me just move this. Assets, just underline. Underlining is imperfect, but okay, you know these are assets. These are assets. Then we start now listing our assets as in the question. So the first asset that we had was clubhouse. How much was clubhouse? That was 150. Our clubhouse was 150,000. Then we go to our next asset. So our next asset is equipment. So we're going to enter our equipment. How much was equipment? So equipment was worth 8,000. So I'm going to enter 8,000. Just entering. There's nothing here. Just enter your assets and your liabilities. So now we're going to enter our next asset. So our next asset is the bank. We had money in our bank account, so we're going to enter bank. How much was the money at the bank? So our money at the bank was worth 5,000. I'm going to enter 5,000. Then what's our next asset? Our next asset is stock. Now that stock is an asset. Stock is an asset. So we're going to enter our asset. So stock is our asset. How much was stock? So stock was 2,500. Hope you guys are following. Just enter your assets. So after entering your assets, you add them. You add your assets. So So we're going to add our assets. So we're having 115,000 plus 8,000 plus 5,000 plus 2,500. 2,500. What are we getting? We're getting 165. So we're going to enter it here. Just enter it. 165 and 500. Just like so. So if we had our liabilities, we would have brought our liabilities here, then done the same adding of our liabilities, finding the total, then lessen it here. But because we don't have liabilities, this will become our accumulated fund. So we've calculated the accumulated fund. Accumulated fund. Accumulated fund. Just like that. And how many marks was allocated for this one? So it was 3. Calculate your accumulated fund. Just 3. Just this. Then you've gotten your accumulated fund. We go to the next question. Next part of the question. So we've done our accumulated fund. So that's how we calculate our accumulated fund. Then the next part, that telling us prepare a receipts and payment account for the year. So that was just the summary. The details that we're having on top. They're just summary of the receipts and summary of the payment. So what we're going to do here is that we're just going to have our receipts and it's just like copy and paste. Don't even stress. Just going to get your receipts. You put them. Receipts. Just these things here. You bring them. Then you put them plus this bank balance. Don't forget the bank balance. It was the opening balance. Even when you're calculating, that's the balance brought down. So even this bank balance will be our balance brought down. So we'll have it there. Then we'll just have our receipts. We'll have our payments. Just like that. Easy. That's why the marks allocated for this one, I think that's 2 if I'm not mistaken. Yeah, 2 marks. Not much work because you're not calculating a lot. So we're just going to get our receipts, all of them, plus this bank balance. Then we add, we find the total. Then we bring our payments. Then we add, then we find the total. Then we subtract. So we're going to have our receipts. Receipts on top. Receipts on top. And down now we're going to start entering our receipts. So on our receipts we're having subscription, receive, subscription in advance. So subscription received. We're going to enter it. How much was it? So this one was 15,000. Okay, so it's 15,000. Then what else? Subscription in advance. So for time, I'll just write subscription as well. But you follow the way it was written. So it's subscription in advance, but just write subscription as well because of time. So subscription in advance was 1,500. 1,500. What else? What else do we have? So what else do we have? We're having refreshment sales. So I'll just put sales, but you write it the way it is. You're supposed to write it the way it is, but I'm just summarizing everything. So refreshment sales, as in the question, it's refreshment. It's refreshment sales, but I'll just write sales for time. So I'll just write sales. How much was our sales? So our sales was 18,550. 18,550. What else do we have? So having dances. Just to enter, just direct, not even stressing whatsoever. So we're going to record our dances here. How much was our dances? Dances, that was 5,500. 5,500. And what else on our receipts? We're having fees for tournament. So I'll just write fees, but here it says fees for tournament. But but I'll just write fees. I'll write 3,600. 3,600. What else? What else do we have? We're having donations from members. So I'm going to write donations from members because these are non-profit making organization. So just receiving donations. You can even see where they're making their money from. They just sell. They subscription, meaning it's just like membership. People pay to be members of this organization. Then that's subscription. So donation, how much is our donation from members? That's 1,000. Then here we're having a loan. That's a loan. We got a loan. So we got a loan 5% per annum. We're going to get the total figure, which is 20,000. So we're going to get our 20,000. We're going to enter our 20,000. And what else do we have? We're having from loan, we're having salary. No, that was sales, actually, sales for lottery. So we're going to enter sales, just sales. So how much was it? So the total, and that was 8,750. Then we're going to enter our bank balance. It's even supposed to be on top there, but I forgot about it. So we're going to enter our bank balance. Enter our bank. So just enter bank. How much is our bank balance? This is the balance I'm talking about here. This one here, 5,000. Going to enter 5,000 there. They will find the total. Find the total of this. So the total of this just add just adding. This is a part just for getting to my free marks because there is not much work here. Isn't a lot to be done here. So we're getting 78,900. So we're going to enter. Just going to enter it. We're going to write it here. We're going to write our 78,800. So 78,900 there. Then now, because it's receipts and payments, so we're going to enter now our payments here. It's just copying and pasting, nothing really here. So now we're going to enter our payments. So our payments, we're going to go again on the question. Just these things here. That's why it's just 2 marks. There is not much calculation. So we're going to get our payments. We're going to enter them. Sports equipment. Sports equip. All right, equipment. Sports equipment. How much was sports equipment? It was 4,500. Right. It was 4,500. 500. What else? What else on our payments? We're having tennis balls. We're having tennis balls. How much is our tennis balls? Our tennis balls were 500. Tennis balls expenses was 500. What else? What else are we having? We're having from our tennis balls, we're having lottery tickets. So just write tickets. How much was our lottery tickets? These tickets were 615, like so. What else? We're having light and heat. So I just entering without any adjustment. Just entering them direct. Light and heat. Light and heat was 800. 800. What else do we have? Light and heat. We're having general expenses. General X. So how much was our general expense? Our general expenses were 2,400. And from general expenses, we're having refreshment purchases. Refreshments purchases. Just write refreshments patch. Refreshments purchases was 12,515. What else? We're going to enter our clubhouse rebuilding, so we just enter clubhouse rebuilding. Clubhouse rebuilding. How much was our clubhouse rebuilding? That was 18,500. 18,500. Then we're going to enter our maintenance of grounds. So maintenance of grounds. Maintenance coming over. Maintenance of grounds. How much was our maintenance of grounds? So maintenance of grounds was 12,000. So I hope you're following. You're having the question, then you're seeing where these are coming from. Just said we're just getting the receipts, then we're putting them there. Also getting the payments, then we're just putting them, nothing else. Then what else are we having? Insurance and and rates and water, but we're just summarizing. So it was 3,715, like so. Then we're going to do as well, we're going to add these. So when you add these, what are we getting? So for the receipts and payments account, when they ask you to find the receipts and payments account, no need of making your job difficult. Just add the figures, add whatever are given. The receipts, you bring them the way they are. Then the payments, you bring them the way they are. Then you just add. Then you subtract the totals to find. Here we call it a bank balance. What we're going to find here, we'll call it a bank balance. So I'm adding the values or the figures. So okay. So when you add them, we're getting 50,000. Getting 50,650. So we're going to write us 650. That's the total payments. Then the totals now, we're going to find the difference. So we're going to say 78,900 minus this money that we found here, which is 50,650. The difference is 28,250. This will be helpful when we're preparing the balance sheet. So keep in mind this figure, whatever we're calculating in the accumulated fund, it will be of help where we're going. So if you make a mistake with something, then that other side will be affected, but just a bit. So don't be afraid if it doesn't balance. Just as long as you've entered other things correctly, that's the goodness about accounts. As long as other entries are correct, even when the balancing is not achieved, but at least you have entered things correctly, then you'll be given some marks. So these things will be required while going. So 28,215. This figure here, we call it a bank balance. So this is referred to as a bank balance. Bank balance. So there are different ways of preparing this account. Some prefer you rewrite it as though you're writing a cash book, where you consider this being this side, considering this side being your debit and this side being your credit. Then the difference, that you call it the balance carried down, whether it's on the debit side, whether it's on the credit side, when it comes down to an asset or a liability, that other prefer that way, and that way is actually the best way to do it, because that's why you know if it's a liability or an asset. But here you can even assess if you want to know if it's an asset or a liability, because this figure will be needed in the balance sheet. So in the balance sheet, you have assets and liabilities. So for us to know that this figure that we've calculated is an asset or a liability, you're going to check if you find your receipts total is less than the payments total, meaning this figure that you found is a liability. But if this receipts figure is bigger than this payment figure, then meaning your value is an asset. Like we found in our case, the receipts figure or total is bigger than the payments total, meaning the figure that we found is an asset. So that's how you do it. So from there now, so this figure will be of value, balance sheet, so we keep it in mind. Then we proceed. What is the next question? So I've been told now to prepare the refreshments trading account. So preparing the refreshments trading account, don't be confused. Now things are getting interesting. When you have reached this part of the question, now you'll be like, yeah, I'm getting somewhere. I know there are a lot of tables to prepare under a non-profit making organization, but the concepts are really simple. Once you grasp the concepts that will be laid down in this tutorial, even other questions, when you try them, they'll be made easy, because I specifically picked this question because it's going to consist of a lot of principles. So principles will be laid down as we go on. So like, share, invite your friend, comment if you're having any questions concerning what I've done, and so that we move together. So if you have questions, you'll be like, I don't understand. How did you find that value? How did you do that? Then you just text, you comment on the section, the comment section, then we move together. So that's how you do it. Now we're preparing the refreshments trading account, as the name entails, refreshment trading, as we're looking at finding our net profit in these other normal organizations, these businesses that are there to make profit. We say we prepare first the trading, then we prepare the trading where we find our gross profit. Then from our gross profit, now we say add incomes. Then we find our incomes, less expenses. Even here, now here we're just going to end on the trading part. That's on top. We'll have our sales, opening stock, add purchases inwards, returns, purchases outwards, all that. Even here, it will be just the same. But here, we've been guided. So the title for this one is just Refreshments Trading Account. You can write the name of the person you've been told, like ours is Rasco. Then you write Rasco's Refreshments Trading Account, but I'll just write refreshments trading account. Refreshments trading account. So refreshments trading account, just like normal, but here we've been guided. So what we're going to enter here is everything concerning refreshments only. Don't be confused. We'll follow the format for the trading account, like we're preparing we're calculating the gross profit, just the same procedure. But here we're just going to look for things that have the name of refreshments on them. I hope I'm clear, and I hope I'm not too fast as well, because if I'm too fast, then concepts will pass. So like I mentioned, concepts will be explained. So refreshments only is what we're going to focus as we're preparing the refreshments trading. So we're going to go back to our question. We're just going to look for things concerning refreshments. So we're going to go on top, start from the top. So on top here, they're telling us stock. They've even put in brackets refreshments. So this is our opening stock because it was on the first and it is stock. So this is our opening stock for refreshments. We'll enter it in our refreshments trading account. Then we proceed. Here on the receipts, like we said, receipts should be referred to the debit side. So on the receipts, they're telling us refreshment sales. And we know these are sales. They've even guided us saying that these sales are specifically for what? Refreshments. So we're going to enter in our refreshments trading account. Then on the payments, they're telling us refreshments payments or refreshments purchases. So we know these are purchases and they're specifically for refreshments. So we're going to enter them in our refreshments trading account. Then we're also having stock on the adjustments here. We're having stock of refreshments valued at cost 1,650. We know this is the closing stock because it's down. So it's the closing stock of refreshments. So we're going to enter it in our refreshments trading account. So we're going to follow the normal procedure. We're first going to start with our sales. So sales, enter sales. So sales, if we do not have, I think this is a wrong format of tables. I had prepared different ones. So it starts from here. We'll use this one, not this table here. Let's use this table, which is having 3 columns. Yes, although it will be affected, but we use this one, which is having 3 columns. Okay, we can use this one, but it's supposed to have 3 columns as you're preparing it. We need to have 3 columns, but I think when preparing this for preparing, when we wanted to do this one, I drew up one with 2 columns, but we need 3 columns, just like the normal trading account. We need 3 columns, but we can work with 2, but standard you need to have 3 columns. So this one, there was an error when extracting this part of the question, so you need to have 3 columns on this one. I emphasize 3 columns, that's the standard, but we can work with 2 because it was an error. So we're going to start with our sales. How much was our sales? How much was our sales? So refreshment sales was 18,550 like that. Then we go to opening stock, just the normal standard of the trading account when you're calculating that account, when you're calculating your gross profit. So opening stock, we're looking at refreshments. So how much was our opening stock for refreshments? So this, we're referring this part as the middle column, this, because it was an error. So this is our middle column. Then this was supposed to be our calculation column. Then this was supposed to be our end column. So because there was a typing, a printing error when preparing the columns of the tables, we drop one with 2. So here, this is our middle column. This is our first column. Maybe people can get confused. So it's supposed to be like this. Supposed to be like this. So when we do not have returns inwards, our sales, we take it to the last column. So the opening stock is always on the middle. So we're going to write our opening stock here. So we're going to get our opening stock. Opening stock, which is this value here, stock of refreshments, this one. We're going to enter it as 2,500. 2,500. Then we're going to go to add purchases, like we do in the normal trading profit and loss. But these purchases, the purchases that we're entering is purchases of refreshments. Purchases, how much was our purchases for refreshments? It was 12,550. Then we add this. Add the 2. So when you add 2,500, like so, 2,500 plus 12,550. Right. So what are we getting? We're getting 15. We're getting 15,050 kwacha. Then from after calculating this figure, we know that this figure is called total stock available. This is our total stock available. Then from there we enter our less closing stock. I hope all of you are by now you know how to prepare a normal trading profit and loss, but here we're just looking at the trading part. I hope you understand what we're doing here. If you are not, you can comment, then we'll do a separate video concerning the same, just looking at how to prepare a normal trading profit and loss account if you are not you're not understanding what we're doing here. So from there now we're going to enter our closing stock, which was 1650. So like we said less closing, so we're going to less, so simply going to say minus 1650. We're getting 13,000, so this figure we take it here, which is 13,400. So this figure is known as cost of goods sold. Then from there, going to less this. So I'm going to say 18,550 minus 13,400. What are we getting? We're getting 5,000. We're getting 5,150. So this one, in normal circumstances, we call this as gross profit. But in this non-profit making organization, we're going to say profit on refreshments, because this is a profit that we made from the buying, selling of refreshments. So that's why the name comes into play as profit on refreshments. Then you're done with this account. We found, so this figure as well will be needed where we're going. So everything that we're doing from here, from the top to where we're going down here, the figures will be needed. So keep in mind. So here we found our profit on refreshments, normal trading account, but mainly just focusing on anything to do with refreshments. So now we're going to go to our next account. Going to do our next account, which is, so this was worth how many marks? So this was worth 3. Preparing this, we got our 3 marks. So congratulations, you're on your way to success. You've gotten your 3 marks when preparing the refreshment trading account. And now we're going to prepare the subscriptions account. So before we go into the subscription account, this is what I want you guys to understand. Like I mentioned, I said concepts as we go on we'll talk about concepts as we go on in our lesson today. So I'll use this part for what we'll be discussing here. So this, because this is principles of accounts, there are certain principles that are governing the flow of information or the flow of these accounts that we're preparing in accounts. So this principle that I want you guys to understand is the issue to do with assets and liabilities. So I'm going to write this thing down here. So I'm going to say opening balance of assets. Opening balance of assets is sorry, let me use this, of assets is debit. So assets, they are opening balance when you're preparing, let's say, a specific account. Let's say the way this one is having a debit side, and also a credit side. Having a credit side. When you're having an asset and its opening balance. I've just told you, okay, this is, let's say, this is a motor, or this is cash, to say this is money the company had at the beginning of the year. Then you're going to refer to this principle saying opening balance for an asset. Where am I going to record it? So you're going to say balance, then you're going to take it on the debit side. This is what we mean when we say every opening balance of an asset will be on the debit side. That's the principle there. Then another principle is the opening balance of liabilities. Opening balance of liabilities. So opening balance of liabilities, it is on opening balance of liabilities, the credit side. So you need to know this by heart. When you just go into the exam, they tell you, okay, what is a liability? A liability is simply a business now owing people money. They say creditors, or having creditors. So credit, that's a liability to us because we need to pay them. It's not our money. We're having Congole for them, so we need to pay back their money. So that's a liability. So when you see us having Congole, business having Congole, having other people's money, let's say a bank overdraft, let's say an owing balance, accrued, or anything of that sort, that is a liability. And the opening balance of a liability will be on the credit side. So if we had, let's say, the business had creditors at the beginning of the year, so when we're writing it in such an account, let's say just a normal account, a cash book, which having debit, credit, and details and date and all that, so the balance brought down of that figure will be on the credit side because it's a liability. Then it's vice versa when you're talking about the closing balance. So the closing balance, now we're talking about balance carried down. So balance, so closing balance. So we're going to start with our assets. Of assets is credit side. Then closing balance of liabilities, liabilities, is the debit side. So it's vice versa. They simply swap. Like we said, the opening balance of assets, the debit side. Then the opening balance of liabilities, credit side. When we're talking about the closing balance now, so the opening balance, we said it's a balance brought down. Then the closing balance is a balance carried down. So when we're writing a closing balance of an asset, it will be vice versa. On top there, we said it's a debit side, but down there, we're going to say it's a credit. We're going to put it on the credit side. So this is an important principle to note. So please write it down as you're preparing many accounts to come. This principle still applies to them. So when you're opening balance, asset, debit side. Closing balance of an asset, credit side. Then opening balance of liabilities, credit side. Closing balance of liabilities, debit side. So that is the principle I wanted to bring about before we continue with the subscription. Then another principle, we'll talk about it in the same as we go on. So now we're going to go back to our question. So our question is requiring us now to prepare the subscription account. So what's subscription? So subscription is simply we are a non-profit making organization. So but we have members, and our members pay some sort of money towards their membership. It's more like a membership fee, as I can describe it. A membership fee. So meaning people pay us as an organization to be members of our organization. So when people pay us, and then when they pay us, we receive that money, quite right. Then when they say they've paid in advance, that to us it's not an asset. Like we mostly describe when you say we've paid rent prepayment or rent prepaid or rent paid in advance, we consider that as an asset to us. But when people have paid to us in advance, meaning we have their money and they haven't used it, or they haven't used it because maybe it's for the following year, the following month, or the following week. So meaning it is an advancement, and to us it is a liability. So it changes here. So when we're talking about subscription in advance will be a liability to the business. But when you say subscription owing, meaning they are having our money, they haven't paid our subscription, so meaning their money, our money is in their hands, so meaning it is an asset to us as an organization. So that is subscription. It's opposite here. Subscription owing to us, it is an asset. Then subscription in advance to us, it's a liability. So this is what we're going to talk about in the subscription account. So you can write your title, subscription account. So you can write loose cause subscription account. Just simplify the subscription account. So here we have date as usual. Then here we have details. Then here we have folio. Folio. So we're going to go to our question now. So here, like we've talked about in the refreshments, we're just going to follow things to do with subscription. So whatever is concerning subscription is what we're going to enter in this account. So we're going to go to our question here. So anything to do with subscription, do we have an opening balance of subscription? We do not have. So if we had an opening balance of subscription, for example, in case you encounter a different question which has an opening balance of subscription, whether be it on the debit side, whether be it an asset or a liability, like I've already told you, owing is an asset to us, then prepayment is a liability. Then you're going to follow this principle. That's why I brought about this concept here, so that even when you find different questions, when you see subscription owing, you're going to treat it as an asset. Then the opening balance for an asset goes on the debit side. Then if it's a prepayment, it's a liability. Opening balance of liability will be on the so you do as y. So if we had one, would have wrote balance brought down. Then that balance brought down, depending, then you're going to take it either on the debit side or the credit side, just for example. But we do not have an opening balance here, because on first year, that's where we would have found a subscription, but we do not have any subscription there. So we're going to go the summary of receipts. We're having subscription received. So subscription received. Now here, like we mentioned, we're treating this as a bank. So this is the bank on the debit side. Then this is on the payments are on the credit side. These are on the debit side, these are on the credit side. Then we're having subscription received for the year. Now another principle we're going to learn today. So this principle is simply a principle in accounts that we call it usually states that for every debit entry there must be a corresponding credit entry. And then for every credit entry there must be a corresponding debit entry for accounts itself to actually be complete. For the accounting process to be complete, every debit entry must have a corresponding credit entry, and for every credit entry there must be a corresponding debit entry. That's the principle here. So every debit has a credit entry and every credit has a debit entry. So for this, in the subscription accounts, I want you to pay particular attention on this one. So in the most people have negativity towards this non-profit organization because there are a lot of principles pertaining for it to actually go well for you. But just understand them, what do they mean when they say this principle and all that? So when they say every debit entry there must be a corresponding credit entry, this is what they mean. So having subscription received for the year, so this is in our bank, we received it, it is on the debit side. So for us to enter it in our subscription account, we're not going to enter it on the debit side. We're going to put it on the credit side. For every credit entry, there must be a corresponding debit entry. And for every debit entry, there must be a corresponding credit entry. So even here, this is a debit entry. Receipts is on the debit side. So this is a debit entry. Then there must be corresponding credit entry. So I'm going to write bank in here. Going to write bank in here. I hope this is helpful. If it has been helpful for you, comment in the comment section saying this is helpful. But if it's not, comment in the comment section saying you're wasting your time. So these are the principles. I hope I'm not perusing, and I hope I'm taking it slow for someone to actually grasp what we're talking about. And there's a high possibility for this account to come in our final, for this year 2023. There is high chances, so you just need to know in case you want to choose this one for your section B. So get to know it. So we've written this side on the credit side. Then we're going to continue. We're having subscription again. Subscription, it was in advance. Subscriptions, we're going to write bank again. How much was it? 1,500. 1,500. Then we're going to continue now. Here, where are we taking this figure, or after finding subscription? Where are we going to take it? We're going to take it to the income and expenditure. Here we're going to take it to the income and expenditure. So here we're going to write income and expenditure. So we're going to write capital letter I stroke E, because we know we're going to take this to the income and expenditure. So we're going to leave this part blank. Then we're going to go next. We're going to write balance. So I'll tell you why we've left it blank. Then the balance, here we're talking about balance carried down. So talking about balance carried down. So balance carried down, we're going to go now. Do we have any closing balance for subscription? Yes, we have. We are having subscription owing. So like I mentioned, owing to us is a what? It's an asset. Owing to us, it's a what? An asset. So we're going to record this according to the principle that we stated here. Closing balance of assets is on the credit side. So we're going to enter this owing on the credit side. So this is how these principles apply. How much was it? It was 800. Then for this part, we're going to go again to our question. There is this subscription in advance. This subscription in advance, yes, we agree it was paid, but it wasn't meant for this year. It was meant for the following year. That's why they have stated in advance. So we're going to treat this as a closing balance as well for the following year, because we are not our members are not going to use it this year, but they're going to use it the incoming year, which is the next year. So this is subscription in advance. So advance, we said it is a liability to the business. So if it's a liability to the business, what is the closing balance for liabilities? So the closing balance for liabilities is a debit side. So we're going to enter this 1,000. I know we've entered it here. We've already put it here, but again we're going to put it here because it wasn't meant for this year. It is meant for the following year. So we're going to put our 1,500 here again. Put our 1,500. Then we're going to do our totals. Our totals. So we're going to add the credit side, and you can even see that the side that has got many will be on the credit side. That's obvious. So 15,000 plus 1,500 plus 800. What are we getting? We're getting 17,300. So 17,300. Then we're going to write it even here. 17,300. Then now we're going to find what's the difference between the credit side and the. So our total on the credit side is 17,300. Then on our debit side, we only have one figure, so it's simply this figure itself. So we're going to subtract minus this figure here. What are we getting? We're getting 15,800. Getting 15,800. So 15,800. Remember, we left income and expenditure here empty. So this is what will go to the income and expenditure account. We're going to write it here. So this is the figure we're going to take the income and expenditure account. This balance here. So not this balance here. Not 17,300. No, but 15,800. That's the difference. That's the money that we're going to take to our income and expenditure account. So we proceed to our next question. Next part of the question. So the next part of the question is prepare the income and expenditure account. The good part about non-profit making organization is that it's when you've done everything correctly above, when you know the principles, just knowing the principles, and you know where to apply them, and you know how to apply them, then your income and expenditure account will go well for you. So now we've gone to preparing the income and expenditure account. So write our title. Going to write our title here. Just write income and expenditure. You can write the name of the person, which is Lusco. But here we're just going to write income and expenditure. Income and expenditure account. Income and expenditure account for the year. Ending 31st December 2020. So here it's even easy. So here what we're going to do, we're simply going to say incomes. We're going to write our title on top here. We're going to put incomes, then you underline. So incomes, what are our incomes? Then we're going to go to the question. Our incomes are simply these summary of receipts. You see how simple this thing is. Summary of receipts. Those are our incomes. So we're going to bring our incomes here. So incomes, subscription. But wherever there is subscription, we're not going to get the subscription here, but we're going to get the subscription that we've calculated. So our first income will be subscription. So we're going to write this in lowercase. Subscription. So how much was the value for subscription? So the value for subscription, the one that we've calculated, this one here, 15,800 is the one that we're going to enter in here. 15,800. Then we're going to continue. Here, we've already entered subscription, so the subscription advance, we'll leave it. Then we've reached this one, refreshment sales. Again, we're not going to enter this refreshment sales, but we're going to enter the refreshments that we've calculated. So we're going to say profit on refreshments, the one that we calculated on refreshments. The profit that we calculated on refreshments, which was, what was the profit that we calculated on refreshments? Where is it? Yes, here. This one, 5,150. That's the one that we're going to enter in our income and expenditure. 5,150. Then we proceed. Which other income do we have? So the other income that we have is so we've entered refreshments. So dances, will enter it just the way it is. So if we do not calculate it, just enter it the way it is. So we're going to enter dances. How much was the figure for dances? Dances was worth 5,500. 5,500. And which other income do we have? Our income that we have is fees for tournament. So we're just going to write fees. How much was our fees? Our fees was 3,600. So 3,600. So 3,600. What else do we have? Then from there we're going to enter donations. We're going to enter donations. 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 How much was our donations? So donations was 1,000. Enter 1,000. 1,000. What else do we have? We're having loan. We're not going to enter this loan. This loan will come down now. I will tell you why. So this one we received, yes, but it's not our income. It's the liability to us. So we enter it in the balance sheet, and we're also going to enter its interest 5% on the expenditure. So we're going to leave the loan. Now we're going to enter sales of lottery. The sales for lottery. Sales for lottery. How much was sales for lottery? That was 8,750. 8,750. Then for our incomes, we are done. We're going to find the total. We don't have any other income. So we're going to find the total. Total of this is going to add them. Say 15,800 plus 5,000, so plus 5,500 plus 3,600 plus 1,000 plus 8,000. We're getting 39,800. So going to write our 39,800. 39,800. Yes, we can write out 39,800. Then now we're going to go to our expenditure, because the income and expenditure. We're going to enter our expenditure here. It's the expenditure. Expenditure. So let's put it in capital letters. Put this in capital letters. Expenditure. So you underline, then you go down here. What our expenditures? So expenditures will be found on this part. So when we're entering expenditures, take note of the adjustments concerning the expenditures. So on our expenditures, the thing that will be affected is the gas bill. We don't have gas bill here, but we have light and heat. So light and heat will associate it with the gas bill. Then insurance was prepaid. We'll take note of that. Then building, we'll also take note of that. Then when we're preparing the income and expenditure, we don't enter assets bought. We don't enter assets bought. The reason why we don't enter assets bought, because assets bought, that's capital expenditure. So under a non-profit making organization, what we call capital expenditure, and also revenue expenditure, and also capital receipts and revenue receipts. So when we talk about capital expenditure is simply money that is spent to buy fixed assets. So we don't record the money used to buy fixed assets or installation or adding value to assets. We don't record that one. So even this clubhouse we're building, adjustment is telling that it was for the extension. So extension meaning we're adding value to a fixed asset. We're not just maintaining it, but we're adding value. So when we're adding value, we're increasing the value of that asset, meaning it's the money that we've used is actually capital expenditure. So in the income and expenditure account, we don't record capital expenditure, money used to buy fixed asset. We don't record that. So please take note of that. It's very important to note, because if you enter money used to buy fixed assets, or extension, or even building an fixed asset building or mansion whatsoever, you don't record them in your income and expenditure. So we move on. So we're not going to enter this sports equipment. It will go to the balance sheet. So what we're going to enter here is tennis balls expenses. Tennessee. Small letters. Tennis balls. And these are expenses. That's why we've put them here. The expenses. So we're going to enter them. Is there any adjustment concerning this one? If not, put it on the middle column. So it was 500. Going to enter 500. What else do we have? We're having lottery tickets. Going to enter lottery tickets. So I'll just write tickets. Lottery tickets. How much were they? This was worth 5,650. 5,650. Then we'll go down here. What else do we have? We're having light and heat. Remember, we said we are going to associate the gas bill with the light and heat. So light and heat. Because there's adjustment concerning this one, I'm going to write it in the first column. So light and heat. How much was our light and heat? Light and heat was 800. 800. So the adjustment for light and heat, they're telling us gas bill was to be paid, meaning it was owing. So when we are owing, when we have an accrued or when we have an owing figure, we add it. So we're going to add owing here, or add accrued, add owing or accrued, whichever you prefer. So add owing. So how much is our owing? So owing was 180 kwacha, 180. So when we add these two, what are we getting? So it is 8 and 9, 8 and 1. So this one will be, when we add these two, we're getting 980. So these two give us 980. 980. Then we proceed looking for more expenditures. So we're going to go to general expenses. General expenses. General expenses. General expenses. How much was our general expenses? So there is no adjustment for general expenses. I'm going to record it directly. 2,400. 2,400. What else? What else are we having here? We're having general expenses. Then refreshments purchases, we're not going to enter. We've already dealt with it, so I'm not going to enter it. Then clubhouse rebuilding. Remember, we said capital expenditure. Why they have even told us in the adjustment, said, but if they don't tell us in the adjustment, you enter it. But if they have told you it's for extension, or if it's for extension, then you know that this is capital expenditure, because you're adding value to a fixed asset, so that is capital expenditure. And we don't enter capital expenditure in the income and expenditure account. So we'll leave this one. We're going to go to maintenance of grounds. Maintenance of grounds. So we're just going to leave it maintenance like that. So maintenance of grounds was with, how much was it? Maintenance of grounds was 2,000. So 2,000, I'm going to enter 2,000 here. 2,000. Then proceed. What else? Insurance, rates and water. So I'm just going to enter insurance here. Insurance. So there's an adjustment concerning insurance. So I'm going to write it here. This adjustment. Insurance was prepaid 250. So we're going to enter first the insurance figure, which was 3,000. 3,750. 3,750. Into this 3,750. Then there's insurance prepaid. So when it's prepaid, we less. So we're going to say less prepaid. Less prepaid. How much was the prepayment? Prepayment was 250. So 250. So when we say 3 375 minus 250, that will be 350, 350, 3,500. You see, less 250, less 250 is 3,500. So I'm going to enter 3,500 there. 3,500. Then here we can say we're done with entering what is here, but there are other expenditures that have hidden themselves. The first one we're going to address is the loan payment. So loan, they said 5% is the interest, and they're telling us interest on members' loan had not been paid from January 1st. So meaning there is an accrued of what's this interest on the loan. So we're going to find 5% of the loan, that's our interest, and then we're going to record it here, say interest for loan. Then we're going to enter it on our expenditures. So interest on loan is 5%, not the total loan. This one, this is the loan that we got, but we are paying interest 5%. So we're going to find 5% of 20,000. So we're going to say 5%, 5% of 20,000, not 1,000, of 20,000. We're getting 1,000. So we're going to say interest. We can even say 5% interest. So you can even say 5%, 5% interest, interest on loan. How much was the interest on loan? It was 1,000. Down 1,000 down. Then we're going to go to, again, there's another hidden expenditure. So here we're going to look for depreciation. While we've been told, they're telling us sports equipment, including addition, was valued 9,000. So here is what I want you guys to see. They're telling us equipment, they have already evaluated for us. They're telling us, okay, equipment now as the business has closed, or the ending balance, the closing balance of the assets of the equipment is worth 9,000. Then when we go to our question, we had equipment at first. We had equipment which was 8,000. Then during the year, on our payments, we bought an equipment with 4,500. So when we add 4,500 plus or 8,000, are we getting 9,000? That's the question. So if we're not getting 1,000, if we're not getting 9,000, like they've already told us that if we add these two together, what we're getting is a 9,000. It was evaluated to be 9,000. Then when we add the equipment which was already existing in the beginning of the year, and the equipment that we bought during the year, if it's not adding up to to the evaluation or the evaluated figure, then we know that the certain difference would be an appreciation or depreciation. So we're going to add the equipment which was available on the beginning of the year, which was 8,000, plus the equipment which we bought during the year, the one that we refused to enter because it was capital expenditure, 4,500. What are we getting? We're getting 12,500. But here they're telling us no, equipment it was valuated at 9,000. So meaning the difference between this 12,500 and the 9,000 is the depreciation for that year, because we need to have equipment which is worth this much amount. Then that the equipment, and then the value that we're finding is less. So meaning the difference is the depreciation. So we're going to say less 9,000. So 3,500 was depreciation for this year. So we're going to enter depreciation for equipment. So how much was it? 3,500. So that's it for the expenditures. We're going to add your expenditures. So we can start from down here, because this figure has already been entered. So depreciation figure has already been entered. So we're going to go to 1,000 plus 3,500 plus 2,000 plus 2,500 plus 998 plus 5650 plus 500. What are we getting? We're getting 19,530. So we're going to write our 19,530 here. 19,530. Then we're going to subtract. So here another concept comes in again. So when we have our incomes are greater than our expenditure, meaning we have surplus. In non-profit making organization, we don't call it profit, but we call it surplus. It has a special name called surplus. So when you have incomes which are more than expenditure, the figure that you find will be a positive, and we call that figure surplus. Then when your incomes are less and your expenditure is more under non-profit making organization, then you find a negative. That negative you found, we call it a deficit. So we're going to use this according to how they will appear. That's how we use them in the balance sheet. So surplus, we'll talk about the balance sheet later. So surplus, we'll know how to handle it in the balance sheet, and also deficit, we'll know how to handle it in the balance sheet. So as we can see, when we see this one, our incomes, we can see in 39 is greater than 19. So meaning our incomes are greater than our expenditure. So meaning the figure that we're going to find is going to be surplus. So we're going to say 39,800 minus 19,530. 530. What are we getting? We're getting 20. So we're going to write this 20 270. So this one, like we mentioned, this is called surplus. This figure that we found is called surplus. So surplus. But if it was a negative, then we would have called this figure deficit. So this figure is called surplus. We're going to use this, so keep that in mind. So we're done with the income and expenditure. Now we'll go to the big daddy, which is the balance sheet. Now we're going to, after preparing the income and expenditure, we're going to prepare the balance sheet. So just write the balance sheet here. Going to write the balance sheet. You need to write the name of the person, but I'm just doing because of time. I don't want this video to be extremely long for people to be bored. So balance sheet as at 31st December 2020. So we have cost, then we have depreciation, which is DEP, what is DEP. Also have the book value, NBV. Then now this is what we're preparing. We're going to start with entering our fixed assets. So fixed assets, what are our fixed assets? We're going to go to our question. So fixed assets, you know how to identify fixed assets. So fixed asset, we have clubhouse is a fixed asset, then also have equipment. So we're going to start with clubhouse. Going to enter our clubhouse. Now note, on the clubhouse, use open parentheses. So clubhouse, we said this detail here. We said clubhouse rebuilding 18,500, and we said the clubhouse rebuilding was for the extension. So when we extend something, are we adding value or are just maintaining that value of that asset? So when we're adding value to the asset or when we're extending it, we mean we're adding value to the asset. So meaning the value of that asset has appreciated, meaning it has gained in value. So meaning this clubhouse is no longer considered the clubhouse as with this figure, which was 150,000. No, the value of this clubhouse has changed. It has gained in value. So we're going to write this same figure here, because there's no provision here. We only have cost depreciation, so there's no appreciation column. So we're going to say this one plus, then this one plus the appreciation, which was this one. Clubhouse rebuilding was for the extension of the clubhouse. But if they didn't put this concept, we would have known that this is not capital expenditure. So we didn't add in value. But meaning they've told us, so we identified saying, okay, this one is really capital expenditure. So we're going to add, because it has increased in value. It has increased by 18,500. So we're going to write down 18,500. So it has increased in value by 18,500. Then we're going to find the cost of this asset now. So 150 plus 18,500. We're getting this value here. We're going to write it 168,500. So on the depreciation side, because we don't have, going to leave it blank. We're going to put a slide, then we're going to record the same value here, 168,500. Then we're going to go to our next fixed asset, which is equipment. Equipment as in the question, equipment. So how much was equipment on cost? So equipment on cost, like we said, there was already existing equipment, then we bought extra equipment. So equipment added together will be that figure that we calculated. We say 8,000, the opening equipment, plus the equipment that we bought, that we're getting 12,500. So we're going to write 12,500 in here, 12,500 in here. Then on the depreciation side, we're going to enter that depreciation that we've entered in our income and expenditure, the difference that we found, which was 3,500. So we're going to enter 3,500 here, 3,500. Then on the net book value, you're going to enter that figure that they've told us. Say, okay, it was calculated or it was evaluated at this much. So even here you can just say, if you want, you can just say minus 3,500. You're going to find 9,000. You're going to enter 9,000 here. 9,000 here. Then you're going to evaluate. Going to add. So add. So when you add this, let's start with this one. So 9,000, this 9,000 plus 168,500. We're getting 17,000. We write 17,177. 177,500. Yes, like so. Then we're going to go here. This, because it's only one, so just going to write it the way it is. Then here we're going to add 168,500 plus 12,500. What are we getting? We're getting 181,000. 188,000. So like that. Then we're going to go to our current assets now. I'm going to say current assets. So our current assets, what current assets do we have? So current assets, we're going to go here. We're going to find our current assets stock. Closing stock, we know closing stock is considered to be an asset. So we're going to enter our stock. How much was our stock? So our stock was worth our stock was worth 1,650. What else do we have as our asset? So we're having insurance prepaid. So insurance prepaid to us, it's an asset because we paid it in advance. Prepaid. So this is an asset to us. How much was prepayment? Say that was 250. Yes, that was a 250. Was a 250. What else do we have here? Here we also have subscriptions owing. Like we already preached that information out there when we're beginning, saying when we're talking about subscription owing, meaning they paid us in, they paid us. So they haven't paid us. So meaning they still have our money. So it's a current asset to us. So we're going to say subscription owing. Subscription owing to us, it's an asset. Subscription owing. Misspelled subscription. Misspelled subscription. Yeah, misspelled subscription. Subscription. So subscription owing. How much was subscription? So subscription owing, they've told the subscription owing is 800. 800. We're going to enter 800. 800 in there. Then now we have another current asset, this bank balance. Like we talked about, if it's on the debit side, then it's if the receipts are more than the payments, then the figure that we find is an asset, a current asset. So here, these calculations that we did, so meaning this is our current asset because our receipts were greater than our payments. So the figure that we found is an asset to us. So it's a current asset to us. So we're going to enter 28,250. So 28,250. We're going to enter 28,250. 28,250. So 28,250 as our bank. So we need to put it here. It's bank. We're going to add this. What are we getting? So when we add this, we're getting 30. We're getting 30,950. Then from there now, we're going to say less current liabilities. Less current liabilities. Less current liabilities. This current liabilities has to be in capital letters. So it's supposed to be in capital letters. It's a title. It's supposed to be in capital letters. Then from there, we're going to look for liabilities. So liabilities here. We're having gas bill to be paid. So meaning this gas bill owing. So we're owing in terms of gas bill. I'm going to write it here. Owing gas bill. How much was our gas bill owing? So our gas bill owing was 180. So we're going to write it here. 180. What else do we have? So what else do we have as owing? We're going to look for gas bill owing, then stock. Okay. So which other liability do we have? So on liabilities, we usually have, so yeah, this subscription, like we mentioned, this subscription will be our subscription. This subscription in advance, it's a liability to us because it was paid in advance, and we have to, the organization has obligation to actually fulfill to the party that has paid the subscription, but they've paid it in advance, so meaning we're having their money. So we're going to write subscription owing. So we're going to write owing subscription, but if you write subscription owing, it's okay as well. So subscription owing, subscription owing in advance, sorry, not owing, it's in advance, this one, advance, subscription was paid in advance. So subscription that was paid in advance was how much? How much was the subscription paid in advance? Subscription paid in advance was, subscription paid in advance was, how much was it? It was 1,500. So I'm going to write 1,500. 500. Then I'm going to go to the next. Interest on loan. Like they've mentioned here, they've told us interest on loan has not yet been paid. So this is also owing. We need to pay for our interest on loan. So I'm going to say interest on loan, which was not paid. So you can say 5%. Say 5% interest not paid, because we need to pay, but we haven't paid interest on loan. We haven't paid, so interest on loan. How much was the interest on loan? The 5% that we found was 1,000. So I'm going to add these. See what we get. So 180 plus 1,500 plus 1,000. We're getting that's 2,680. So this one now we're going to less from our current assets, total current assets. So we're going to say 30,950 minus 2680. Like this. What are we getting? We're getting, so we're going to write this here, 28,270. Then we're going to add, to say less, we're going to add this one and this one. So 28 plus 17, like so. When we add these two, what are we getting? We're getting 205,770 kwacha. So I'm going to write this here. So when you reach this part, your heart is racing. Have I done things which are correct? Have I missed a figure? Have I made a mistake? So we're going to confirm. So this is the balance that we're supposed to balance our account with. If we don't find this, then errors we've made while calculating. So this is the money that we're supposed to find. So now we're going to continue. We're going to say financed by. So financed by. So they're just the same like every other. These things, when you just know one thing, then that same principle will continue being applied down in different accounts. So here, financed by, here we're not going to say it's financed by capital. We're going to say this business is financed by accumulated fund. This business is financed by accumulated fund. So how much was our accumulated fund? Like I mentioned, everything that we did was of importance. It was to be used. So accumulated fund that we found was, accumulated fund was 165,500. So 165,500. Going to enter it here. That's our financed by. Business was financed by accumulated fund, which was 165,500, like so. And also, like we mentioned, if we find a positive here, if we find a positive when we're preparing the income and expenditure, we're going to add it to the accumulated fund. But if we found a negative, then we treat that as a deficit, then we're going to subtract it from the accumulated fund. So we're going to write add surplus, add surplus, add surplus. How much was our surplus? So surplus that we found, how much was it? We found 20,270. 20,270. So 20,270. 20,270. Then we add these two. Add these two. Going to say 16565 again. 500. So plus 270. We're getting this figure here. Going to write it. 770, like so. Then now, after we found this, we're going to say add long-term liabilities. Add long-term, because the loan that we got is a long-term liability. So when we reach this point, we say add long-term liability. But if we didn't have a loan, this was the figure that we would have found for balancing. But because we have a loan, so we're going to say add long-term liability, because a loan is a long-term liability. It's not a short-term liability, but it is a long-term liability. So add long-term liability. It's supposed to be capital as well. Add long-term liability. If we have many. So ours, we only have one, which is the loan from members. So we're going to write our loan from our members. So the loan from our members was with, the loan that we got from our members was with this loan here, 20,000. So we're going to say 20,000. So we're going to enter 20,000, like so. And now you're going to add. So this figure which is here plus 20,000. What are we getting? We're getting the same figure that we found, the balancing figure. So meaning our account has balance. Every principle that was applied in the appropriate manner. Every procedure was followed, and this is what it takes for you to balance your non-profit making organization. So these are the principles that you need to know for preparing the non-profit making organization. I hope this video was of aid and you've gotten something from this that you apply. Then if your account does not balance, you try a different question, because there are a lot of different questions. You try different questions, the same principles. There are the principles that we've mentioned here. There are a lot and they are applicable. So just apply the principles. Then if it does not balance, I'll drop my WhatsApp line. You simply inbox me on WhatsApp saying, okay, I was trying this question, then it has failed to balance. Where have I gone wrong? Then if I know, if I don't know, I'll be honest, but if I know, then I'll enclose, I'll tell you, okay, if you're supposed to do this, then supposed to do this for it to actually go well. So this is a non-profit making organization, and this is how you go about a non-profit making organization. Unless there are any other other questions, simply feel free. You can comment below saying, okay, I didn't understand when you're preparing this, I didn't understand when you're doing this part of the question, please highlight on this. Then I'll gladly do as well, so that we move together. Help is assisted. It's not just for fun, but people need to be helped as you are preparing for your exams this year, and even whenever you watch this video, maybe 2 years, 3 years from now, you'll be assisted. So this is how to go about it. So please like, share, and subscribe to support the growth of this YouTube channel. Let's discuss ECZ. Thank you. Goodbye.